Hello, everyone. Welcome to the Decentralized Masters Podcast, your go-to source for everything in decentralized finance. I'm Tristan, and I'm here today with my co-host Jon. We're here to guide you through the ever-changing world of DeFi, one strategy at a time. Every week, right here on the Decentralized Masters Podcast, we're going live at 2 p.m. Eastern Time on Thursdays, and I believe we also go live on Tuesdays as well now, to bring you the latest insights, updates, and tools to help you, be successful in DeFi. Jon, how are you today?
I'm doing pretty good, man. Doing a lot better. Sounds like you're getting sick.
Yeah, but I don't know what's going on. I am feeling a little not great, but I was actually up late last night. I was creating the research reports for the private group this morning, so
Nice.
but it was a sacrifice for a good cause.
Yeah. Looks like Tony is here with us. Thank you for your work. Thank you, Tony. That's what he's saying. Welcome in. But yeah, man, it's good to be back. I know you had the session with Filippo last week. I'm sure that went really well. I'm definitely feeling a lot better, but I was sick. It's still not there 100%, but yeah, there's something going on in the air for sure that I know I'm not definitely the only one that has been sick these last coming weeks. So besides that, a lot of things in the market overall. A lot of things that Tristan's actually going to go ahead and touch on today. We're going to go ahead and start off with Tristan, and then we're going to go ahead and save what I'm going to talk about towards the end, just because we feel like what he has to talk about has more of a relation to not only what is currently going on in the market, but also the data that we actually got from CPI data yesterday, I believe it was released. So I think it's really important for us to go ahead and be aware of this information, to go ahead and make our analysis moving forward with the market. But we're going to go ahead and start off with Tristan. Good to be back here with you, man. And I'm excited to be back on this live stream here with you.
All right, I'm happy you're back. It wasn't the same when you were sick. It was not the same. Filippo's great, of course, but it's just not the same. Alrighty. So, are we looking at my screen? Yes, we are.
Yep, we can see it.
All right. All eyes on CPI. So this week we did have the CPI data come from the U.S. government. For those that don't know, CPI stands for the Consumer Price Index, and that measures the average change in prices that pay for your goods and services. So that's things like your grocery bill, rent, gas, typical things that people need to buy to sustain living. So it was released yesterday by the U.S. Bureau of Labor Statistics. Then the CPI is important though. So why it matters to you, the trader, because the Federal Reserve uses that as their kind of guideline when they are deciding their interest rates. And so, we want to be able to have lower CPI because it's better for markets because that will indicate lower interest rates. So the analysts had predicted that we would get a 2.9% CPI reading for February 2025. However, we were blessed with a 2.8. So we were low. The CPI came in 0.01% lower than expected. In the market when this happened, Bitcoin did a little bit of a rise, but then it just came right back down. So not good, not bad, kind of in line with expectations. So all eyes are on the Federal Reserve for next week, though. We have the FOMC meeting. Since this CPI data came in, I guess you could say neutral. The market is expecting no interest rate hike, no interest rate cut either, though. So we're something at like 99% of bets thinking it's just going to stay flat, which is, it could be worse. Inflation could have came in a lot higher, and we could be looking at interest rate hikes coming, or the cuts would be completely off the table. But it wasn't bad. So neutral is better than up, as you could say. Yeah, but I just wanted to go over this a little bit more about some CPI history. When inflation exceeds expectations, Bitcoin will often go down. It will often be hit with some selling waves. Um, an example was in 2022 when we hit during the I know you're not allowed to. Well, you're not supposed to say it on YouTube, John. We had the sickness. Uh, we had the issue, and then like end of 2022, beginning of 2023, we had inflation started to really pick up because the Federal Reserve dumped a lot of liquidity into the market to keep the economy alive. But that ended up in a lot of inflation. We got a really high inflation reading. It was something like 7-8%. And that tanked Bitcoin from 30K right down to 18K. So almost, a 50% dump in feels like 2 days. So not great. But the opposite is also true. When you have cooling inflation, so if you have low inflation data, so low CPI readings, you can actually get a boost. So in the beginning of 2022, when CPI fell, Bitcoin rose 9.6% in a day. So it really, the price of Bitcoin really is affected by this data that we often see from CPI, and then in turn the Federal Reserve. Here's the good old poly market at the moment. I've become very dependent on poly market data, just because usually money knows what's going to happen. Money is the best crystal ball out there. Just figure out what everyone else is going to do, where they're putting large amounts of their own capital at risk, and you will often find the answer. Just like how we saw the answer in that November election a few months in advance. You will see that for a lot of things. So that's my kind of go-to source for predictions nowadays, poly market. But as you can see here, for this November rate decision, we have a 98% chance of no change, and 1% chance of a decrease, and a less than 1% chance of an increase. So most people are really just saying it's going to stay flat. Here's just my little technical analysis. I think John will go into this a little bit deeper later. But this is just what I'm seeing in the market at the moment. Not gonna lie to you guys, it's not terrific. Like there are good and bad signs in the market, as there always are. But just what I'm seeing right now is that we are in this downward channel. We are kind of pushing downwards, pushing sideways almost. And I think that we could potentially see this channel, continue. We could keep going. We could keep going down towards that 72K, 60K kind of level. No, sorry, not 62, 72 to high 60 kind of levels. Not ideal, but that's just kind of where I'm seeing that support. As you can see here, this white line, although it cuts off a little bit here, this is where we were hitting resistance a lot before the election. So we would get to that 72K level, and then we would be knocked down, and then we come back up, get knocked down again, and then we only broke out of it as soon as the election of Donald Trump happened. So that's kind of where I'm sitting at the moment. It's things, could be a little bit more optimistic, but at the moment, I'm just seeing, with it, we might continue moving down for a little while. In the top right-hand corner here, you might see this little TikTok screen. I saw this yesterday, and I thought it was funny. And you see here, it says ADA to $10, XRP to 200, USDT to 5, Doge to 3, and Litecoin to 1,000. Sol to 700, and ETH to 10,000. So when you see obviously this is comedy, or I really hope it was comedy, because USDT isn't going anywhere, or if better not go to 5. But when you start seeing interesting things like this, and you start seeing things that are a little bit outlandish, but they're trying to be passed off as true on TikTok, on Instagram. When it comes to things in crypto, like you'll see a lot of XRP people say, it's going to 100 this year. You'll see that on Instagram, and unfortunately, it was not comedy, so it was serious. So when you start seeing things that are like extremely optimistic in culture and social media, that make you wonder, like, that can't. I love the optimism, but that cannot be true. That is kind of just not realistic. That's when you got to wonder, maybe I'm close to the top of the market right now. So it's just, I thought that was funny, so I'll share it with you guys today. And if when things are a little bit optimistic or a little bit unrealistic, then maybe it's close to the top of the market. I made a little Monte Carlo simulation, just something that I'm practicing with myself right now. This was something that our lead researcher in our private group, Tyler, he's very familiar with. I was learning this from him the other day, actually. But you see from this, it's random. This is random kind of dots on the. These are random predictions. Like it's going off of previous trends, previous data when we were around these prices. So it's not exactly like, this is not gospel. This is not going to happen. But as you can see, a lot of the predictions from the previous data are saying that yes, we'll probably drop down a bit here. Like even this line in particular. You see a few. Sorry, I don't have a drawer right now. As you see, some of these lines hit my support actually, or get really close to it. My support being that white line, and then they bounce back up. So, and this is the Goldilocks situation. This is hopefully what I'm going for, but as always, it doesn't decide anything. In the end of the day, it's just predictions. Maybe Jon might be more familiar with that, and he might speak up for Monte Carlo simulations during his talk. But yeah, that was just something I was practicing with the other day. I also wanted to bring this up because I thought this was pretty interesting data. The presidential cycle, for many of you know, kind of coincides with the Bitcoin halving as well. So whenever there's a 4-year cycle, there's an election, Bitcoin that does its halving, and we get a new president, or there's an election at least. During the election cycles, even previous to Bitcoin being created, you would often see it would go like this: the previous president, or the president in power, dumps a lot of liquidity into the market. In the last 1.5 year of their term, and that juices up the economy, makes everything look really good. So their chances of being re-elected go higher. When the economy is good, people, or at least it looks good, people say, we can point to the president and say, oh, he's been doing a great job. And that kind of happened here in 2000. As you see, we had Clinton moving to Bush. There was a bit of a pump up in the market, and then when Bush was elected, it went down. Why that kind of happens is whether a new president takes over or the current president is reelected, it means that the new president has to take a little bit of all that liquidity out of the market because it starts driving up inflation, and then you will actually see that movement in the S&P 500 here, as the president is kind of forced to do a little bit of, as you could say, pulling back, uh, or like strategic destruction. You see a lot of you'll see a bit of a pullback in the S&P 500 in that first year of a new president's term, going from Clinton to Bush. Here you can see that. Going from Bush to Obama, you can see that again. Not so much Obama to Trump, but right at the end of Trump's term there with COVID, there was a similar situation. And then Biden took over, and then if this chart went out a little bit further right, you'd be seeing that right now, the S&P 500 coming down a bit for Trump's second term here. So it's actually not strange to have this contraction in the stock market during a president's first term. It's something that you can often see in the it's something you can see in the S&P 500, and then you have the Bitcoin halving that coincides with this as well. I've got to find a chart that has the Bitcoin halving and the presidential cycle in the same thing. I think that would be quite useful. Yeah, so I was just going to point that out to you guys, that it's not the end of the world. If anything, Trump will pump up the market in his last 2 years to make everything look good. So if things aren't good now, then give it a few months and they'll get better. I have my tinfoil hat theory that goes from that, is a good segue from what I was just saying there. So this is not going to happen. This is just a theory that I thought of. I've seen it kind of mimicked among a few investors as well. But this is just, some predictions. So, get that tinfoil hat on and don't take this as gospel. Trump may actually be trying to crash the stock market about 20% on purpose. And this would cause a flight to safety into the bond market, or US Treasury bonds specifically. And this will cause the Fed to slash interest rates so he can refinance the debt closer to zero, and maybe even get some deflation going, and lower the price of groceries and consumer goods. That's that, and the Fed will have to slash interest rates because the more capital that is flowing to Treasury bonds, it drives down the interest rate of Treasury bonds. So the more money in the bond, the less your yield on that interest rate is going to be. So if they can push that down by scaring people out, they can get people into bonds by scaring them out of the market. If things are going to be volatile, like, oh, new tariff, stock market drops 10%, but then comes up back up 5% or drops down another 10%. People are just going to say, screw this, I'm getting out of the stock market and I'm going into bonds, where you can get a very safe and predictable yield, although usually less. So he's going to use these tariffs as his incentive for companies to start building and producing in the U.S., so they don't have to pay them. The tariffs will, create this global trade war, which they kind of already are. I think a tariff on the EU put a tariff on American whiskey, I think either today or yesterday. So obviously this trade war is not going away, and it's just heating up. So U.S. producers are going to start producing more for U.S. customers rather than exporting for the world. So Trump is going to continue playing this game of chicken with the tariffs, causing some volatility in the market, which will make the stable income from the treasury yields a lot more attractive. So that's kind of just my tinfoil hat theory here. It makes sense though. Like it does make sense. I don't think Trump is destroying the market on purpose. That's not that's not how you get reelected. Even though he's done after this, but he has a legacy he wants to have. He wants to go down as at least a decent president. So that's kind of just my tinfoil hat theory. And people have short-term memories, right? So if he bombs the market in this first year and then recovers it in the next 3 years, then people aren't going to point and say, "Hey, look at that first year. What the heck was that?" They're going to be at the end of these 4 years here and go, "Oh, that was a great market performance. Great, Trump was great," right? So if they are going to take the market down, it'll always be in that first year of being elected. This is one little project that I saw go live quite recently, and it's interesting. So I just was going to share it with the podcast. There was another one that I was sharing, but I've saved that just for our private community. So if you want to ever see the full story, check out the private community. I think Jon can pop up the link to it. But anyways, if you want to look at that, check out the link below. But anyways, this project is called USDKG. It is a stable coin launched by the country of Kyrgyzstan. So if you have never been to Kyrgyzstan, it is kind of east of China, south of Kazakhstan, right to the right of Uzbekistan, right there in the middle of Asia. I have never been out this way in particular. I've been to Armenia, which is on the other side of the Caspian Sea here, but I have never actually been to that part of the world at this point in time. Maybe at some point. But anyways, they've actually created a government stablecoin. So it is actually backed. This USDKG is actually backed by the gold reserves of Kyrgyzstan. Of Kyrgyzstan's, I guess you could say economic makeup. They have lots of hydropower, but they are very rich in mineral wealth, and that one of those things being gold. And they do have some uranium and some silver as well, but they have lots of gold. So they are going to put that gold to work with this stable coin. So there are lots of different stable coins, USDT, USDC. Those ones are fiat based stable coins. So in theory, there's a dollar in a vault, or they have it in a treasury bond. For every one USDC, there is one US dollar in a vault, treasury bond, etc. That's the fiat stable coins. And then there's also algorithmic stable coins like DAI and what's another one? Magic Internet Money. Those are two algorithmic stable coins. And then this is a newer type of stable coin. Not too sure if anyone else has a one-to-one dollar gold-backed stablecoin yet, but this is maybe one of the first. So it does this. It creates the stability of a stablecoin using gold. So you can go and redeem your stable coins. So you could go and redeem your USDKG. You do have to take a flight to Kyrgyzstan though. So it's not an easy country to get to. You'll probably have to fly from New York to China or LA to China and then China to Kyrgyzstan. No direct flights, but you can go there, redeem your gold for, redeem your USDKG for gold. You could also redeem it for fiat. So I think they will have, when I was listening to this presentation, there will be a fiat payment system. So you could go from USDKG to US dollar right from their website or their platform. So it will be just a new kind of stable coin. You're not going to go and get massive returns on this because it is a stable coin. But if you can go find potentially some DeFi options for it, like a liquidity pool or some staking, this would be potentially a really cool project to kind of keep your eye on. I know it's the country of Kyrgyzstan's, probably not as it doesn't invoke as much confidence as something like the United States, Germany, or Japan would, but country's a country.
Great presentation you have so far, man. Really liked it. I think I missed that one on Let's Talk Crypto yesterday, so at least I got to see a little bit of it, but didn't get to get all of it. I know you shared a little bit more with our private community. It looks like we have a question. Hey, Teresa, how's it going? Hope you're having a good one. Welcome in. All righty. So a lot of what Tristan basically talked about today, I'm going to touch a little bit more into a little bit more detail and a little bit more of like an open discussion. So we're going to go ahead and start off with, of course, crypto bubbles as we usually do. We do see right now a little bit of green around the market. Nothing too impressive. I think, in my opinion, overall, the market's going to continue to fall. And I'll go a little bit more into a little bit more details to the reason why. But as you see on the daily, so far, we do see some red coming in. And on the weekly, of course, you see those 20 to 30% downsides on a lot of these crypto assets, say down 18% for the week. You see even tokens such as Jasmine or Jasmine. Is it Jasmine or Jasmine?
Jasmine.
That one down 23%. Render, I know Render has been taking a pretty big hit overall this last year, to be completely honest on that. But Solana down 14%, and on the monthly, this looks a little scary. As we see Solana down 37% for the month, we see Fetch about 37%, Hype down 44%, Link 30, Uni 38, Bonk down 41. That's really the one that kind of stands out the most to me in Tau. And when we go over to the yearly, most of them are going to be slightly in the green. Most of them being, OM up still an 18x from where it was. But you do see other asset classes such as Say from the year down 79%, Engine down 82, AVAX 67 at a pretty good discount in my opinion. So as you see right here, all across the board, every token pretty much is down. Render down 74%. So this is really just a perspective, so you guys could all kind of see that it's not just you that's portfolio is getting hit right now. It's almost everyone's. OP down 80%. So these tokens, it looks like Arbitrum's down 83% for the year, so it's pretty crazy. But as you see all across the board, most of these tokens are down, specifically altcoins. Very few are either at slight break evens or slight profits. I mean, Ethereum on its own, it's down 53% for the year. So the one performing pretty well so far that I would say, of course, PAX G up 39%. But this is just a perspective, so you guys could all go ahead and see that the market all across the board is red. It's not just you. You didn't do anything wrong. Everyone is getting destroyed right now at the moment, especially if you are pretty exposed to altcoins or even meme tokens. So not looking too good for the market. Now, there is a few things that we need to talk about as to what is causing a lot of this sell-off, a lot of the sell pressure, and a lot of this fear coming into the market. So just last month in February, which was a few weeks ago, job cuts actually came in higher than February since 2009. So as you see, of course, the economy is not looking too well. So that adds on even more fire besides the tariffs that we have. I know a lot of people say that the tariffs don't have a correlation to the market. I agree to disagree. My opinion is I definitely don't think it has a correlation related directly, but I do believe that it's just people being fearful of the reaction of what could be potentially happening, right? A recession, it is not something that no one wants to hear. And these kind of news and data that we've been getting, such as a job cut loss that happened, since back of 2009, does not look too good overall for the economy, right? Another thing too that it's a really pretty good indicator that is based on how the market is measured is auto loans. The U.S. uses auto loans as one of the best indicators to go ahead and see how retail spending or consumers are doing in general when it comes to spending money. And usually, one of the ways they go ahead and gauge that is through auto sales. If they do see an increase of auto sales, they usually go ahead and say that the market's doing good. Or if there's a decrease in auto sales or even luxury goods or retail spending, is usually not a good sign. Means a lot of people are either fearful or a lot less people are spending their money because of fears of a possible recession. So they would rather go ahead and take on that new luxury vehicle that just came out and spend their money instead. They'll probably put that into bills. They'll probably save that money. And as you guys know, inflation has been through the roof these last couple months. So it's been really one of those in between right now. Car sales have fallen down quite a bit in the last 3 to 4 years. I would say they've roughly fell about 30% in the used car market. So definitely coming down from what we saw prior during the pandemic, where all the cars are going way above MSRP. And now the car market's suffering. Now they're like, hey, what's going on? Now a lot of people are, unfortunately, they're under the loans. So a lot of the people that ended up purchasing their cars during the pandemic bought them for 10, 15, even $20,000 over MSRP, and now are under. Now if they want to go ahead and sell their car, it's very difficult for them to get out of it due to the fact that they paid at a premium, and now cars have come down at least, I would say, roughly between 20 to 30% in the used car market. So definitely, I've been wanting to go into purchasing a new vehicle, but I've been patiently waiting. And fortunately, the luxury side of the car sales is looking really good. So you guys might be able to get some good deals on those coming up already. Actually, I've already seen a lot of good deals, but I'm still waiting. I think the car market's still a little bit slightly overpriced, overvalued. And I do think the car market is going to come down a little bit more. We are seeing car repos, the highest that we've ever seen in over 30 years. Once again, another sign of a possible recession, right? So they usually say that during a recession, you really don't know you're in a recession until later down the line. But these are indicators that we're seeing as to what is adding on more fuel into what we're seeing with tariffs and things like that. So as you see, this is not good news. Realistically, not good news. We also have a lot of credit card defaults, a lot of people defaulting on their loans that we've ever seen since in over 30 years, right? So as you see all across the board, consumers are definitely getting hit very, very hard. Of course, there's always two sides to everything, but I think the biggest market that's suffering the most right now is the auto industry, due to the fact that a lot of people made a lot of those purchases during the pandemic, and now they want to go ahead and get out of that car, or they want to go ahead and size down. Now they have to go ahead and pay a very hefty price to even go ahead and get out of that loan, due to the fact that they paid premiums on those. So right now, not looking too good. That's another sign that we could go ahead and see. Another thing that kind of shook out the market these last couple of days is during an interview, I guess if you want to call it. I don't know what you call these reports. I don't really watch the news, so I don't know what they will call them. I would call them an interview, but they were talking to Trump, and they asked him, is there a possibility that we could be seeing a recession coming into our economy? Basically, his response was that we could be experiencing some difficult times coming in due to this transition period. So he didn't say yes, he didn't say no. As you know, the market's always going to take that the way they want to take it. So they didn't like the response of the way he responded to this. So as you guys saw these last couple days coming in Monday, nice little sell off in the market. Now, keep in mind, this goes with both the stock market and the crypto market. This is not just the crypto market that's getting destroyed. The stock market literally lost all of its gains from essentially when Trump went ahead and became official going into office. Let's say got elected in November. All those gains on the stock market completely wiped out. Crypto, not yet, but the stock market, literally everything that just happened from November till December, all those gains are wiped out. Over $4 trillion wiped out of the market. So as you guys see, it's not looking good all across the board. A lot of bad things. It's like one chain reaction leading to the rest. So don't just think it's just tariffs. It's not just Bitcoin's not getting the reserves yet. This is the reason why the market's not going up. No, it's because there's other problems, as you guys saw, that Tristan went ahead and shared, that are actually going on in the world that are causing a lot of panic and fear. Now, I'm in California, guys. I went to my local Stater Brothers a few days ago, and eggs were at $48. I think it was like a 12 egg pack, 24. I don't know, but it was like $48. The little cart about like 18 bucks. 20. So you're seeing, I'm not sure if a lot of you guys in the other areas you guys are at, if you guys are witnessing this, but I was blown away because eggs have always been one of those resources that you can get a very high protein source for a very low price. And now, right now, I'm not sure if it's directly just the tariffs. I really doubt it. Apparently, there was like some sort of bird flu that was going on that also caused this whole entire thing with the eggs. But yeah, I was mind blown when I saw $48 eggs. Like, I'm like, I should have been investing in eggs. That would have been the real hustle right there, right?
Chicken farm.
Chicken farm, man. Like, those people are making a whole bunch of boatload of money right now. But yeah, that's what I'm seeing all across the board, right? So those added on with that, people fighting over eggs, like that's crazy. Like during the pandemic, we saw people fighting over toilet paper. Now we're seeing people fighting over eggs. Like I've seen videos of like people loading up on eggs and people fighting and then setting up these fights. Even I went to my local Trader Joe's. I'm not sure if most of you guys are aware of what a Trader Joe's is, but it's very similar to like a Sprouts or a Whole Foods. And they had a sign that there was only a limit to how many eggs one could go ahead and get. And I think it was like two or three carts. I think two was like the max that one person could go ahead and purchase because of this whole entire eggdemic. That's what we're going to call it, the eggdemic. But yeah, so we have all of this repos, high delinquencies on credit cards. We also have these talks about a possible recession. We have the eggdemic recession too as well, coming up with eggs in certain places. I heard in some places you guys are not having it too bad, but out here in California, and I know in some places out in Arizona too, you guys could be witnessing some very crazy high prices when it comes to not just food in general, but eggs right now in particular is really where the premium is coming in. Now, one next thing I want to go ahead and talk about before I start talking about charts, and I start looking a little bit more into the market. Let me go ahead and see if I can disconnect with all my devices because I see that I'm lagging a little bit.
Eggs are expensive in Canada right now also.
Really? How much are they going for?
If you were wondering. Oh, same price as yours, but that's in Canadian dollars, so it's a little bit cheaper. But oh yeah, they're more expensive than they've ever been in Canada. And the problem is though, you guys probably make all your own eggs, so the eggs that you see in your stores probably came from an American farm somewhere. A lot of our eggs probably come from the U.S., so we are getting hit by tariffs a lot harder.
That makes sense. Yeah, and the thing is too though, like especially here, like in other states, I know we've also been having a whole entire issue with farming and things these last couple of years. So I'm sure a lot of that also adds to it. Like especially in California, like there's a lot of farms now that have now those farms have been sold and now they started building houses. So I'm sure a lot of that also has to have a correlation to, the prices and the increase of food and dairy in general. But that's pretty insane, man. It almost feels like we're entering the pandemic 2.0. Like it almost feels like a deja vu. Like people fighting over toilet paper, but this time people are fighting over eggs. Like you can't make it up, crazy times. Crazy times. One of the biggest things I wanted to go ahead and mention, guys, is we do have the FOMC meeting actually that is going to be going live next week, the 18th and the 19th. I believe that's next week. If not, that's like in a week and a half. Let me just double check. I'm pretty sure that's next week, though.
I think that's next week.
Let's see. That would be, yep, next week. So the 18th and 19th, that is going to be on a Tuesday and Wednesday. So basically what I'm saying is I would recommend all of you guys, in my opinion, for now, I would hold off before making a big impulsive decision when it comes to purchasing any crypto, to go ahead and hold off, wait the next coming days to go ahead and see how the FOMC meeting goes. And just know that for the FOMC meeting, they could go ahead and announce rate cuts. Now, I kind of have a feeling they're probably not. If anything, they'll probably push until May. I mean, that'll be kind of crazy. But what are your thoughts right here, man? Like, what do you think is going to happen? Like, I know we're like almost in the same kind of tinfoil kind of thing, right? We've talked about. You mentioned how you think also, and I've also talked a little bit about this in my advanced office hours yesterday for our private community. How I believe also that Trump could potentially be purposely causing this in the market to go ahead and refinance a debt for basically zero, right?
Yeah. So that's what I think. They're not going to get zero, but they'll get close. They'll try and get close. That is what I'm kind of thinking they're pushing towards. Will it be able to happen? I don't know. He'll have to definitely cause a little bit of disruption in the market for that to happen. For a little bit of, let me add on to that though. The Federal Reserve has two mandates, two jobs. One of their jobs is, keep the U.S. job market strong. So, make sure companies are hiring, make sure unemployment is low in the U.S. Their other mandate is to keep inflation at around 2%. So right now we're above that mandate. So that's why I don't think we are going to see a rate cut this time. Potentially next time. It'll be data dependent. If inflation CPI data is lower next time, then we might see better chances of a rate cut. But there's almost like a secret third mandate of the Federal Reserve though, and that is keeping the stock market up via jobs. So when companies are performing well, their stocks are up, they can hire more. They're more inclined to hire new people. When we have market declines and stocks are falling, they're less inclined to hire people. So this Federal Reserve almost has this secret third mandate of keeping the S&P 500 at least stable and not going down. So if the S&P 500 starts tanking even harder, or just continues tanking, honestly, it's not doing well at all. If the S&P 500 continues in this current path, having a rate cut next FOMC meeting, not this one, but the one in May, definitely in the cards.
Yeah, I definitely agree with you. I mean, it's kind of funny because I remember talking about this with our private community back in like October, November, where I mentioned and I was talking about how the longer we could prolong a rate cut, the actual better it is for the economy. And that's what a lot of people don't really understand or realize is that the way things were going on during the pandemic, where they just started basically everything was at zero. When it came to credit cards, they were issuing credit cards left and right. Car notes, you were able to get a car left and right with a premium. Now we're suffering those consequences now. So it's not going to happen overnight where we're going to see this change. And in order to see this change for a better economy, there has to be what we're seeing right now. High inflation. We have to see eggs at $48, unfortunately. Like, we have to see all these negative things happen before things get better. So we have to go through the bad times for a while. It could be a few more months before we kind of see this correcting itself. I definitely do see that, and it's actually interesting. Like I mentioned, I was saying that the last thing we really need is for rate cuts to happen right away. And that's what I was talking about back in like June, November. I was saying if we do get rate cuts, the market's just going to fly. And if the market just flies with no correction, the come all the way down is going to be terrible. People are going to get wrecked. So believe it or not, guys, we need corrections in the market. I know it hurts. I mean, my portfolio is down probably more than most of you guys because I am on that super high risk on. I was anticipating the market to take off in around during these times right now. I'm not saying it can't. I'll talk a little bit about the charts, but I really doubt it. We probably won't see anything for the next, it could be it, honestly, for the next 2-3 months, realistically, where we'll probably just see the market sideways for a while before it even does anything massive. And my portfolio is down like 80 or 90%. The reason why is because I took on that super high risk initially thinking that we weren't going to go into what we're going to get into. But that's the way the markets work. You always have to make calculated bets. And you always have to know that if your calculation goes wrong, how you can go ahead and protect yourself. And that's actually what I'm going to be talking a little bit about in the short term right now, about how you could go ahead and potentially still be exposed to this market with very or to no risk at all, but still having exposure to the upside. But basically what we need to go ahead and see for the economy overall right now, we need to see this squeeze. Things do need to get a little bit more difficult before things get better over time. And it's unfortunate that right now we're seeing this in the market. And I think it has to do with a little bit of a overreaction as well, in my opinion. I think people are just overreacting because everyone was under the impression that as soon as Trump came in, everything was going to fly out. I think we all had that impression. I mean, I was a little concerned, to be completely honest. I said this from the beginning. I'm like, the last thing we want is for the market to fly out, because if the market flies, that means a quicker the bull run's going to end, and then the harder the crash or the correction is going to happen. So right now, what we're seeing is it's actually healthy, and in my opinion, I think it's a man-made correction. In my opinion, I think this was purposely done on purpose to slow things down and make things go up in the future. Because if the market would have just stayed that way, everything would have just ran up. And like I said, the correction coming down would have been a lot worse. It would have been a lot worse with what we're seeing right now. That would have probably meant that Bitcoin would have hit over $200,000. Market probably would have retraced crazy numbers, and everyone would definitely be in panic then, because then we would have a bigger problem to deal with. But let me go ahead and talk a little bit about what we're seeing across the board and what I've been keeping my eyes on. So, for example, I've been talking about the DXY, and this is why I think a possibility of a near bottom could be coming in very soon. Very soon can mean a lot of things. Could be a few weeks. It could be a few months. It just depends on the way you look at this through a different perspective. But as you see right here, the dollar has been falling. It has been falling support multiple times. There's a lot of support within these ranges right here. I'm just going to go ahead and highlight them, and it has been continuing to fall. So let's see how the dollar does in the next coming days, and if it continues to fall. But I think we will be seeing the dollar coming back down to at least around this $100 range in the near future. Another thing I want to go ahead and cover is the US 100. And this is the reason why. This is the NASDAQ. And this is the main reason why I don't think that this market has hit its bottom. Tristan talked a little bit about that 60, 69, that $70,000 range. That's where a lot of support's actually heading towards. But if you go ahead and take a look at here, this is the NASDAQ. This is the tech sector of the stock market. And a lot of people compare this with Bitcoin. And as you see right here, we really started witnessing a top at around December. And that's really where the market topped. It was between December and then actually mid-February when the market finally ended up topping. And if you actually go ahead and put the Bitcoin chart right next to this, it's pretty impressive how it literally follows it almost one-to-one. Bitcoin right here is this red line. And as you see, this is where the first initial top happened, which was in December. And you see that right here happen as well. And the second correction was right here in where we're currently just witnessing these last couple of weeks. And then this is where the NASDAQ is right now. And this is where Bitcoin currently is. So as you see, there's a strong correlation as to the stock market and cryptocurrencies, specifically Bitcoin. And as you guys all know, Bitcoin is the leading currency. So the rest of the altcoins are going to take a bigger hit when things are not looking too well, right? So for that reason, as you see right here with this chart that I'm showing you, once I go ahead and get rid of this chart with Bitcoin, let me go ahead and get rid of that. As you see right here, our next support for the NASDAQ is going to be around this 18,500. If we were to go ahead and measure this, this is still another about 4% correction, which is not too bad now. Yesterday, I believe it was a little bit higher. It was right here at above this this higher end right here around 19,700. So as you see, the stock market is getting wrecked right now. So there's no other market right now that you can say that's doing very well for you besides gold. And we'll talk a little bit about gold. And we actually saw the breakout on gold today. And this is actually what I've talked about with our private community yesterday as to why I expect the crypto market to continue to fall for at least a few more weeks. Leading into the FOMC meeting, and depending on how it goes, it could probably stay stagnant or it could have a super V-shaped recovery. I don't think so, but we'll talk about that right now. So as you see, there's still a lot of room left for the stock market to fall. Now, hopefully, this is the bottom for the stock market, or around this 18,472 for the NASDAQ. If we do come back down to these levels, I mean, it's definitely going to shake out a lot of people. It's not going to look too well. But also another thing I wanted to go ahead and show all of you is gold. So I was actually talking about this with our private community. So for all those that are in our private community, you guys totally understand and know where I'm coming from, because we talked about this yesterday and why I was expecting the market to fall down more. But yesterday, in these last couple of days, gold was struggling to break past $2,900. It was actually an area of resistance. And one thing that I wanted to go ahead and show you guys is that as you see right here with gold, gold started to take off in December 18th. And if you actually go ahead and see how quick gold went up from December 18th to where it's currently at right now, that's already over a 15% move to the upside. And if you were to actually go ahead and compare this with the NASDAQ, as I showed you, the NASDAQ really ended up topping off at around December. So as you see, gold started giving us those signs early on that people were pivoting from risk on assets to something a little bit more, I guess, safer, just such as gold. So right now what we're seeing with gold is that we were expecting a rejection to happen with gold. And that's what I was hoping for. And that's why I was hoping that there was a possibility that the bottom could be coming in about last week. And I mentioned yesterday to our private community, watch out, wait a couple more days. There's a possibility gold might break new all-time highs. That could mean the stock market and crypto market will continue to fall. And guess what happened today, guys? Gold has now finally broken that resistance at around this $2,900 range, and now is currently towards approaching the $3,000 an ounce mark. So this is basically telling us that people would rather be in assets such as gold as opposed to cryptocurrencies or any other volatile asset in the stock market, such as the tech sector. So with that being said, it looks like there's more of a pivot towards gold right now. And as you guys just saw right now with the stock market, there's a lot of room still left for it to fall. For what I'm doing personally is I'm in a platform called Harvest. They have some pretty good yields right now at the moment. Currently, right now, I'm using Arbitrum. Arbitrum and Base have some really good rewards. But right now, I'm just sticking to a USDT, guys. I'm all about high risk. And when someone like myself is all about high risk, makes a pivot into something safe, it's definitely alarming. So just a heads up, if I'm the kind of person to take risks, but right now I think we're at some very shaky times in the market. I think there is still a little bit more bleeding to come. And in the meantime, I would rather get that confirmation or wait to see where the market's actually heading instead of guessing right here. Because if you're just practically, even if you're just still dollar cost averaging right now, there could be a slight risk that you could be taking that let's say we do enter a bear market. Really doubt it. I don't think so. I think there's just going to be a prolonged effect as to dragging this out to get everyone out of this bull market, to get everyone discouraged, to get everyone mad, and then leave this market altogether. It happens over time. It's happened multiple times. But with that being said, I would highly recommend if you are considering to stick your money anywhere, stick it on Harvest. 8%, 8.34% is not bad for basically zero risk. The only risk you get is, of course, if the platform gets hacked. Harvest has been out for years. I haven't heard anything about them, anything going on with the platform. So far, I can vouch for them. And it's a really easy platform to navigate. We teach this in our private community, but it's very simple, guys. You could go ahead and enter these liquidity pools with no risk. Not only stablecoin liquidity pools, if you are holding on to asset classes such as Ethereum right now, currently offering 4%, and also for Bitcoin offering 3%. I mean, 3% for Bitcoin is not bad at all, guys. Virtual right now at 33% and Arrow at 9.70%. So as you guys see, there is a few things you can still go ahead and take advantage during these market conditions. But if you were to go ahead and ask me what I would go ahead and do personally, I would just wait it out, let the market do its thing, let them have their noise. It's going to be a lot of back and forth these next coming weeks. And in the meantime, I'm just going to be stacking USDT to the side and just patiently waiting for the market to give me signals that a bottom is now officially coming. But there's more bad signs, in my opinion, there's more bearish signs than bullish signs as of right now. So just showing us that there's more downside to come. So just prepare yourself. Specifically right now for Bitcoin, we're also seeing this rejection right now at around this $84,000. Now it could still have the possibility to try to break this tomorrow, and that would definitely save us. And that would look very good. But ideally, the area we want to enter for Bitcoin as soon as possible is around that $91,000 range. The sooner we could go ahead and get to here, this is where I would start to feel a little bit more confident into deploying more capital aggressively. But until then, until I don't see that, keep in mind there's no resistance for Bitcoin or supports all around the zone until this next zone, which is around the $70,000 range. So this is where the worrying is also happening. Now, in my opinion, I think if we do see Bitcoin ever come down to around like 67, 65, I think that's going to be an indication of a bear market. And this is also what is causing fear in the market is all of those negative things that I just mentioned. We have jobless claims. We have high repos, delinquencies on credit cards, inflation through the roof, possible recession talks right now, no rate cuts happening yet, and the stock market taking a massive hit, and then Bitcoin not being anywhere near some pretty good supports or resistance. So that's where a lot of the red flags are coming in and why people are overreacting. Now, I don't think we're in a bear market. I don't think we will be entering that stage. But as you guys know, we have to always wait for confirmation to know 100%. And that's one of the main reasons why right now a lot of people are reacting to the market ahead of time, because a lot of people are calling this, okay, this is over, this is it, and people are giving up. And essentially, you're going to start seeing a lot of liquidations, a lot of people selling, and a lot of people finally moving on with whatever they have going on because of fears of what's going on in the market. But in my opinion, I think once we start entering 60, 65, 64, and we're down below there and we can't come back up, it definitely would be a very, very bearish sign. But so far, we're not there yet. And we haven't been there yet. And we first have to go ahead and wait and see how this support acts. And keep in mind, guys, all it took was one tweet for this pump to happen. That's all we need. One tweet, one catalyst, and this thing could go back up like this. And all this bearish talk that we're having about right now, it's like nothing ever happened. And this is the beauty about the market that we're in, that as fast as it could come down, as quick as it could go up. So this is the reason why I'm still hopeful. I'm still hopeful for the market, but just keep in mind that if Bitcoin does come down to the $70,000 range, expect even a possible 40% for other altcoins. So altcoins still have another possibility of them falling down an additional 30 to 40%, at least minimum. Some of them might fall 20%. Some of them might be at their near bottom, so you might not really witness much. There's some altcoins that are already down 80 plus percent. So there's not really much that's going to happen to those. But there's other pairs that have only witnessed a 30% correction. So those, being on the lookout, could still have another additional 30 to 40% correction. So that's why I'm giving you this heads up and I'm giving you this warning. Depends on where you're at in the market, right? For me personally, I'm already super overexposed. I don't mind waiting a few more weeks to get a confirmation. In the meantime, I'll stack some stable coins to the side. I'll have cash ready. So when I feel confident about this market, I'll start deploying capital aggressively. But for some of you, you might be now entering into this market and maybe dollar cost averaging now might make sense. Like I said, it's all dependent on where you are in life personally, in your personal life and with your portfolio. But what I'm doing personally is I'm going to wait it out a few more weeks, wait for a confirmation, and I'll let you guys know when I'm going to start deploying capital aggressively. But I do have a few altcoins that I'm keeping in mind, say SUI, AVAX, a lot of good opportunities I think that we could be purchasing. But I'll talk about those as time goes on. But right now, signs are showing, in my opinion, that there's a possibility market could go ahead and continue to go down. So just be prepared. And I'm also looking for the dips in the stock market. I'm going to go ahead and load up on some stocks too. There's some really good juicy stocks in the video right now. Tesla down over 50%. I'm sure a lot of it has to do with Elon being a little bit more on the political side. But even Tesla down over 50%, I think it's a deal. So for me, I'm just stacking cash right now these next couple weeks, waiting to start buying these opportunities. And I'm going to be buying both opportunities in the stock market and in crypto because I think that it's a good deal in my opinion. Now, I want to go ahead and turn that to you. What do you think, Tristan, on that? Do you agree with this? Do you think there's going to be more downside, or do you think this is the bottom for the market?
Oh, I definitely think there can be more downside. We are not at the bottom yet. I know you just said like all it takes is one tweet to pump market up, which it does. But what else can we have right now? We just had the U.S. Strategic Reserve announced, and it did nothing. We got that one pump, and now we're down from there. So I don't know what kind of good news we're going to need. Like I can't see the fundamentals are good for crypto right now. Like things do look good. Like we got the strategic reserve. We have the SEC has dropped all those cases. Regulations are becoming more favorable. Like all the good news is there and it's doing nothing. So I think the market is in this, the bulls are scared and bears are emboldened just by the way markets are. So I definitely think we will see more downside until at least the support is kind of made and bulls start feeling a little bit more confident in the market.
Yeah, I saw recently, a few days ago, I saw the heat map liquidation And there was about a 50-50 of people believing that it's still the same thing. 49% of people are long and 50% of people are short. So almost roughly about a 1% difference of disagreement there. So it's literally a 50-50 right now, with what's going on with the market. It's really a make or break for crypto. Really. We just need to cross our fingers and hope we don't fall below $60,000. Now, I do think it's a possibility we could see $68,000 in a fast, very, very fast way, kind of like a flash crash where we've seen previously, where it just goes down very fast, but then just comes up very quickly. We've seen that very, very, very often in the past times in the market, like we saw right here for Bitcoin, where it dumped all the way from $69,000 to 49, and then quickly got bought up and started climbing back up. So I wouldn't be surprised if we see like a wick coming down to, like, let's call it like $70,000, and then we quickly go down to like 68, 69, touch it, and then just quickly now like see that buying pressure coming in. And maybe that could be forming a massive inverse head and shoulders pattern, which would be a really good thing. But that's one thing that could happen. But like I said, for the moment, I think expect more selling pressure coming in. But in the meantime, I think these could be some pretty good opportunities coming our way in the next coming weeks. But really, I guess the worst case scenario, man, if you really think about it, I guess they start cutting interest rates until June, because that's when the expiration comes to an end for the debt to be, is it finance again, or what is it?
Yeah, refinance.
Yeah, so it's maybe June. Maybe this squeezes out till June. and that,
Whoa.
that would be basically April, May. That'd be another additional 2 to 3 months of just nothing. Because that's the next FOMC meeting is May, and then after that is June.
May, June, yeah, yeah. Well, things could be getting interesting. That's for sure.
Yeah, look, May is the next one, and then June 17th to 18th. So I wouldn't be surprised, man. I wouldn't be surprised at this point of where we're at in the market. I wouldn't be surprised if they try to squeeze us out all the way until June or July before they make a decision into cutting rates. I think low key that would be a good thing for the economy. I think we need to see a little bit of the squeeze. Unfortunately, we need to see things get worse before they get better. So overall, as much as this might hurt at the moment, it's going to be good for us in the long run. But yeah, we need to experience that pain right now in the market, in my opinion, before we start seeing some upside. So don't be surprised with what could be happening in the next coming months. I mean, Trump basically even said it himself. We're going into a transition stage, and it's not going to be easy. So it's definitely going to take us some time there. But Crystal went ahead and commented, 1 out of every 5 kids in the U.S. are starving, don't have enough food. 1 out of every 8 NYC public students are currently homeless. Yeah, I can't imagine what the numbers are overall with all of that that's going on. But some very hard times to come, in my opinion. I think it's still an opportunity for us. It almost reminds me back to what we saw during the pandemic. I don't know why, but this almost brings me pandemic vibes, where everyone was fearful, and the next thing you know, coming in July, early August, everything just started flying. And if this is the case where they might cut rates until May or June, there could be a possibility we might see the same narrative. I remember during the pandemic last time, around June, July, August, early July, that's when the market started picking up. And then leading into December, that's when all the stocks started going through the moon. GameStop made new all-time highs. AMC made new all-time highs. Neo made new all-time highs. Like all this, the stock market was flying. And I don't know why, but I have a feeling that might be happening again. That'd be great if it does. I think it's definitely going to be some fun times in the market, but that's just my opinion overall with what we could be expecting in the next coming weeks.
Yeah, I don't think we'll be seeing stimmy checks again, but we might.
I know, man. Elon did.
I am getting pandemic vibes, but
Elon did talk about stimmy checks, though.
Yeah, that's true. That's true. If they can cut enough money from Doge on the U.S. budget, they're like, oh, we'll give out the savings in a stimulus check.
Yeah, they said they could
Yeah.
give up to like $5,000, man. So who knows? We'll see. I'm not
You're not
hoping.
against that.
Yeah, I'm not hoping on that. Like I'm not like waiting on that. But I mean, a $5,000 extra check, I wouldn't mind if they do start releasing that. And you know, the
Yeah,
first thing
that's
that
not
that
bad.
money's going to go to, that's going to go to the crypto market. So,
Exactly.
and that's what everyone else is going to be doing too. So we could get some nice little stimmy checks like that. You know, that's going to be all thrown back into the market. So, um, I don't know. We'll see where things go, but I'm definitely excited to see what happens next week with the FOMC meeting. What are your thoughts?
Yeah, my thoughts are nothing for May.
You don't think they'll
Uh,
cut rates, man? Like that's
no,
crazy.
no, nothing for May. There's 98% chance on polling market they're holding it. So
Oh,
I'm
really?
with
I didn't
I'm
see
with
that.
the majority. They're not they're holding steady. June, that's a different question.
When do you think they'll start cutting rates? Like May or June? I'm kind of going for June, man. Honestly,
June. I'm in the June camp as well. Sometime this summer, hopefully.
because it wouldn't make sense for them to. In the beginning, I always thought cutting rates was the thing that we wanted, but overall, as an economy, it wouldn't make sense for them to cut it too quick. Because if they were to cut it that quick, that would have just overstimulated the market, and then we would have harsher market conditions
Yeah.
later down the line. So
Inflation
worse
would
than
pick
what we're
back up,
seeing
and
now.
oh yeah,
Yeah.
yeah.
So,
Eggs would be $50. Yeah.
dude, eggs would probably be at $100 by then if that was to happen. If they were to just cut rates like now and like everything started flying once again, I don't know what we'll be seeing, man. Some crazy prices all over the
Yeah.
world.
The eggs would be too expensive. And that's the important thing. Does forget the stock market. If I can't buy eggs for the cheap, I'm not happy.
Yeah, man. Expensive eggs, that's definitely something I never saw coming.
Yeah, yeah. Oh my god. Do you want me to walk us out, John?
Yeah, man, that's pretty much it. I'm already completely done.
All right. Well, thanks for tuning in, everyone. I hope you're walking away some clear strategies and insights to push you on your DeFi journey and as well as your egg purchasing habits. Remember, DeFi is evolving fast, and staying ahead means taking action with the right knowledge. If you are ready to dive in deeper and want a roadmap to build your DeFi success, check out the DeFi Masterclass. Link is in the description below. In the training, you'll receive clear hands-on strategies to maximize returns, manage risk, and truly make the most of what DeFi has to offer from our CEO, Tan. Make sure to like and subscribe and hit the notification bell so you don't miss next week's live episodes. Until then, keep learning, keep growing, and I will see you right here next time on the Decentralized Masters podcast.
All right, guys. Take care. Have a good one, and I'll see you guys next